Welcome to the deep dive. We're cutting straight through the noise on Sprinklr's Q2 Fiscal 26 results.
Yep, we've got the earnings report, the transcript, and we're going to unpack what it means for you. It's a company in quite a bit of transition.
Definitely. Let's dive right into the Q2 numbers first. So, total revenue, $212.0 million. That's up 8% year over year.
And that beat the forecasts, right? Analysts were looking for, what, $205 million or so?
Yeah, just over $205 million, so a solid beat there. And subscription revenue, key metric, up 6% to $188.5 million.
And what really jumps out, for me anyway, is the efficiency side, that non-GAAP operating income number.
Right.
$38.2 million. That's an 18% margin. Just a year ago, it was 10%.
Huge jump. And the bottom line, non-GAAP net income per share, $0.13. The forecast was closer to zeros and tens.
Exactly. Comfortably beat it. Plus, they're sitting on a good chunk of cash, $474 million, more cash than debt. Looks pretty healthy on the surface.
Okay, so strong quarter, beating expectations.
Yeah.
And this is the big but for you listening. The stock actually dropped like 8.26% in pre-market.
Yeah.
What's the disconnect there? Good numbers, stock goes down.
Well, that's often the signal, isn't it? The market's looking past the rearview mirror, even a good one, and focusing on the road ahead. Concerns about future growth, maybe, strategic shifts.
Forward guidance, you mean?
Exactly. It almost always comes down to the guidance and the story around it, especially during, a transformation like they're talking about.
Okay, so let's get into that guidance. For Q3, the quarter ending October 31st, subscription revenue, they're saying $186 million to $187 million.
Which is about 3% year-over-year growth at the midpoint, noticeably slower than the 6% we just saw in Q2 subs.
Right, a step down. Total revenue forecast, $209 to $210 million. And non-GAAP operating income, also a bit lower, $28.5 to $29.5 million.
And they gave reasons for that step down in subs from Q2 to Q3. They mentioned continued necessary cleanup of challenged accounts. Sounds like dealing with some past issues.
Okay, so addressing maybe some legacy problems.
Yeah, and they also flagged higher cloud costs coming in Q3, said it's because of, strong uptake in their AI products.
Yeah.
So more usage equals higher costs, impacting that operating income line.
Interesting. So using the AI costs more in the short term, but the full fiscal year 2026 guidance, ending next January, they actually raised it.
They did. That's the other side of the coin. Subscription revenue guidance up to $748 million. Total revenue up to $839 million.
That's a $12 million bump on their total revenue from their previous guidance.
Right, and they raised the non-GAAP operating income guidance for the full year too, $133 million. And they expect to be a GAAP profitable for the full year.
So Q3 looks a bit slower, maybe some cleanup costs, but the full year outlook is actually stronger than before. The market's reacting to the Q3 dip more, perhaps.
Seems like it. Or maybe just the uncertainty of this whole transition phase, balancing that positive full year revision against the near-term slowdown and the costs involved. Investors might be thinking, okay, cleanup is needed, but how long does this transition really take before we see acceleration?
That makes sense. Which leads us nicely into the transformation itself. There are leadership changes happening too.
Yep, big ones.
New Chief Revenue Officer, Scott Millard. He comes over from Dell Technologies, where he was leading global AI sales. That seems significant.
Very significant. Hiring someone with that specific background, global AI sales from a giant like Dell, it really signals where Sprinklr sees its future growth engine. Definitely leaning into AI and enterprise.
At the same time, the CFO, Manish Saran, is leaving. And the CEO, Rory Reid, is stepping in as interim CFO.
Yeah, that part might raise some eyebrows. A CEO taking on interim CFO duties during a major transformation. It's a lot. It could signal stability challenges to some, or just a temporary measure until they find the right permanent fit. But it adds to that feeling of, a company in flux.
Rory Reid calls this a transitional year, stretching it to fiscal 26. He talked about 3 phases. Phase 1, business optimization is mostly done.
That's what he said. Strategy, costs, product roadmaps, kind of getting the house in order. Now they're moving into phase 2, transition phase.
Okay, what does phase 2 involve?
This seems to be about embedding those phase 1 changes deep into the company culture, making it stick. It's often the harder part, moving from planning to ingrained behavior that runs through the rest of this fiscal year.
And part of making things stick seems to be this initiative, Project Bear Hug. Sounds friendly.
Yeah, catchy name. But it's serious business. Launched back in March, it's a major effort to get really close to their top 700 customers.
Top 700, how much revenue is that?
Get this, it's 80 to 90% of their total revenue. So basically their core enterprise base.
Wow. Okay, so Bear Hug is about focusing intensely on the biggest clients. Why the need for such a targeted push?
It's directly aimed at fixing past problems, things like churn, downselling, especially in the mid-market historically. They're trying to mend fences, fix implementation issues, and really deepen those enterprise relationships, make themselves indispensable.
Like that customer quote the CEO shared, operates like an extension of our internal team.
Exactly, that's the goal. And they did say the number of these challenged accounts is trending down since May, June, so maybe Bear Hug is starting to work. It's about securing that base before trying to aggressively expand again.
So managing the short term, shoring up the core,
Yeah.
and then they expect, what was this phrase? A bend in the business.
Yeah, the CEO mentioned looking for that bend, basically an inflection point, sometime in the second half of this fiscal year, maybe into early fiscal 27.
What does that bend look like in reality? Better numbers?
Presumably, yeah. Improved renewal rates, higher customer satisfaction translating into, faster growth returning across the board. That's what you as a listener should be watching for in their metrics going forward. Proof that the transition is leading to durable growth.
Got it. Okay, let's pivot to AI. Sprinklr calls itself an AI native platform. That term gets thrown around a lot. What does it actually mean for them?
It's a good question. For Sprinklr, it means AI isn't just bolted on. It gets built into the core architecture. They use a mix domain-specific AI trained on customer interaction data and generative AI for content and conversations.
And the CEO made a pretty bold comparison, right? Likening AI's impact to the cloud, the internet, mobility.
He did. It shows how fundamental they believe AI is, not just to their platform, but to the whole future of customer experience and business itself. It's a massive bet on AI being the next transformative wave.
Are we seeing practical examples of this? New AI features?
Definitely. They talked about enhancing their customer feedback management CFM, using AI to analyze all sorts of data, structured, unstructured, from everywhere, and make sense of it automatically.
Okay, so better insights from feedback.
Yeah, and also deploying Sprinklr AI agents, which they call agentic AI. Think 247 automated support, plus an agent co-pilot to help human agents work faster and smarter.
So automation and augmentation for support teams.
Exactly. Lowering costs, improving efficiency, but also hopefully improving the agent experience. And remember, those higher cloud costs they mentioned, that's supposedly driven by customers actually using these AI tools. So there's uptake happening.
That ties back. Okay, makes sense. They also rolled out a new pricing model starting Q3 for new customers. Hybrid.
Yeah, a mix. Seat-based pricing, which is common, combined with a consumption-based commitment. So you pay for users, but also based on how much you use certain features, likely the AI stuff.
Why the change?
Sounds like simplifying the buying process, especially for those large global enterprises they're targeting with Project Bear Hug, making it easier to adopt and maybe scale usage more transparently.
Right.
It aligns with that enterprise focus.
One more point on strategy there. CKO's business, Contact Center as a Service.
Yeah.
They said they're deliberately governing its growth this year, slowing it down.
Yeah, governing was the word. It sounds counterintuitive, right? CKS is a hot market. But they said they want to harden it first.
Harden it, meaning?
Make sure the implementations are successful, expand the functionality, basically get it really solid before pushing hard for growth in fiscal 27. It's like, build the engine properly before you floor it.
Patience. Quality over immediate quantity.
Seems to be the plan. Again, ties into that broader theme. Fix the foundations, ensure quality, then accelerate. It's about building that durable, long-term growth.
Okay, so wrapping this up, we've seen Sprinklr deliver a strong Q2, beating forecasts, but the stock took a hit. Investors seem focused on the transition.
Yep. A multi-phase transformation underway. Leadership changes, Project Bear Hug zeroing in on key customers, and a huge bet on being truly AI native.
They're cleaning up past issues, investing heavily in AI, refining their go-to-market with new pricing, and even pacing growth in areas like the CKS to ensure quality.
It really paints a picture of a company playing the long game here, addressing the challenges head-on while trying to position themselves for that next wave of AI-driven customer experience. The big question for you is, how quickly and effectively does all this translate into results? When do we see that bend in the business?
Exactly. We'll be watching those renewal rates, customer satisfaction signals, and of course the growth metrics in the coming quarters to see if this ambitious transformation pays off. Lots to keep an eye on.